Hello guys, it's Stock Trader Max here and welcome to another video. Today I have a very exciting video planned for you guys, and that's because we're going to be going through PayPal's Q1 2024 earnings that come out just yesterday. Now for those who follow me here on YouTube or perhaps follow my X page, you should know by now that PayPal is by far my largest position in my portfolio. In fact, I own $682,500 worth of a stock, and over the past 3 to 6 months I've accumulated over 10,050 shares in PayPal. It's a stock that I do believe is undervalued, and I'm a big believer that this stock could potentially rally anywhere between 50 to 100% in the coming 6 to 12 months. But before we get into today's video, just 30 seconds of your time. I've just recently launched a new subscription plan. I've had many of you at home reach out to me saying, Max, I really enjoy your work and I would like to copy your trades. So I have launched a Signal group. It's called Stock Investment Group. I charge a yearly fee of $1,499. And what does this do? It gives you access to my Telegram group chat where you can work one-on-one with me. Every position that I open on my own personal trading account, I will share with you. I will also update you with the latest news pretty much on a daily basis. And if you have any questions, you can reach out to me on a one-on-one level. So if you would like to join that service, then please do not hesitate to visit my website, dailymarketmovements.com. I'm going to leave my website link in the description of today's video. But let's get started with the earnings report. Now, I've got a few technical charts that I just want to kind of go over. For those who missed my previous video, here is PayPal. You know, we have a massive speed bump looking chart, and we all know the story, right? During COVID, this stock went parabolic along with many other stocks in the stock market. PayPal went from $82 a share all the way up to $310 in late 2021, beginning of 2022. Then, of course, what happened? Well, we all caused high inflation because we were sat at home and we were buying so much stuff that there just wasn't enough supply for it all. So the Fed had no chance but to hike interest rates from pretty much 0 all the way up to 5% to combat 13 to 14% in inflation. And that obviously had a massive negative effect on many stocks in the stock market, and PayPal lost roughly 80 to 85% of its value. Now, these two white lines on this graph that I've drawn here is the trend that PayPal was trading in prior to COVID. So let's just pretend that COVID never exists. It never come around. Well, you know, in my opinion, I think that PayPal would have probably continued to trade within this trajectory. And at this moment in time, PayPal could have been trading between $200 and $230 a share. So what I believe has happened here is that the market has over-exaggerated towards the upside when we've peaked towards the top side of its channel and we traded all the way up to $310 a share. The market was probably over-exaggerating and moved towards the upside. And in response, what has happened? Well, the market, as I just mentioned, the PayPal stock fell 85%, and we probably over-exaggerated towards the downside. But this over-exaggeration in the market, which is pretty common in the market, does in fact offer opportunities. And I do believe that PayPal is a fantastic opportunity due to the fact it is undervalued. Now, if we just quickly scroll down, technically speaking, going into the earnings report yesterday, PayPal looked very, very bullish. In fact, we've been forming this inverse head and shoulders pattern that we're pretty much about to break. We've also broken out this 2-year downtrend. Since pretty much the beginning of 2022, we've been creating a series of lower highs and lower lows, but that has actually changed as we've managed to bottom at around $50 a share, and we've actually started to form a series of higher lows here. So this is very encouraging. If we look on a short-term basis over the past 3 months since I've owned a stock, we have actually been in a process of forming this cup and handle pattern. And we were at the very end of that cup and handle pattern looking for that breakout higher. And then probably most importantly is the bullish crossover. We have the 50 and the 200-day EMA, which is the red and blue line on your screens. And we had the 50-day EMA that was about to cross above the 200-day EMA. In fact, right now there's about a 20-cent difference between the two. And this is a big indication that the short-term momentum in the stock is in fact changing. So once we have that 50-day EMA that crosses above the 200, that will be a great buy signal. It's also known as a bullish crossover. Now, here I have drawn a chart. this is basically a summary. Instead of having to go through all the key long figures that PayPal have provided, I've kind of squished them all into a very simple chart. And what I've also done, I've also brought in the Q1 2021 figures because I wanted to kind of do a comparison towards the end that I'll explain shortly. But if we just look at PayPal, last year in Q1 2023, revenue coming at $7 billion, earnings per share $1.17, free cash flow $1 billion, $959 million in net income, and the stock was 75% off its all-time high. Now, if we just quickly look at the numbers that was reported yesterday from PayPal, revenue actually coming at $7.699 billion. We had earnings per share that come in at $1.40. We had net income that coming at $1.55 billion. And as we all know, the stock price is currently 78.06% off its all-time high of $310 a share. So what I've got here, I've got a column of a year-over-year growth. And this is obviously the figures that we got yesterday compared to the same figures that we saw back in Q1 2023. And in terms of revenue, we had 9% growth, earnings per share, 20% growth there. Free cash flow, 76% growth compared to this time last year. Net income coming at 20% higher than 2023 figures. And the stock has fallen roughly 9.33% since Q1 2023. Now, what I wanted to do also is show you the comparison in growth compared to the 2021 figures. And you might be thinking, Max, why have you brought the Q1 2021 figures? Well, the reason being is because PayPal was trading near its all-time high. It was in an 18% drawdown from its all-time high of $310 a share, and stock was trading at around $254. Now, psychologically, we all know that the stock market is kind of a voting mechanism. And if investors were willing to pay for PayPal at $254 a share, then surely they'll be willing to buy it down here with pretty much a 73% discount compared to where it was trading back in Q1 2021. So let's just compare the growth in terms of percentage points from the numbers that we got yesterday with PayPal and compare them to the 2021 figures. Now, revenue come in, as I just mentioned, at $7.699 billion yesterday compared to the $6.03 billion that we got in 2021. That represents a 27.69% growth. Earnings per share coming at 1.40 versus 1.22 back in 2021. That's almost a 15% growth in EPS figures. Free cash flow up 15%. Net income up 6.42%. So here we have a business that, if you look at their stock chart, you would probably be made to believe that the company's dying. But in fact, the company still has some very healthy growth figures, yet it's trading at a 73.23% discount compared to where it was trading back in Q1 2021. So for all the investors that were buying PayPal 2-3 years ago around $250 to $310 a share, well, guess what? You can buy that exact same company with better growth figures at a 73.23% discount. Put that into perspective. And then, finally, if we just look at the after hours or the aftermath response here from PayPal, we did have that gap higher. We traded up towards roughly $71 a share, which was good to see. Stock was up around 5% at the open, but during the trading session, we have actually sold off and paired much of those gains. And we've kind of seen this with many stocks. We saw it with Google. Google was up around 13% the other day. That's now below the swing high prior to it reporting earnings. We've seen it with Microsoft now. It just tends to be what's happening in the stock market at this moment in time. We're seeing these gap highs, but ultimately throughout the session, the stock is getting sold off and pairing those gains. But I have seen on X many people saying that they're really frustrated with the price action that's been seen in PayPal, but I'm actually not. I'm actually very encouraged. We've broken out here, team. We've broken out this cup and handle pattern, and all this simply is, in my own humble opinion, is a back test of the previous area of resistance to see whether it holds as an area of support. So going forward in the next couple of trading sessions, what I would like to see is buys come in, protect $68 and see a return back above 70. If we can return it back above $70 a share, then in my own humble opinion, I think that we will go to close this gap that we formed back in August 2023, which sits at around $73 a share. I think this really sets up a nice move going into the next earnings. So I do believe that we could potentially push higher up towards $80 a share as we go into Q2, which is I think it's at the end of July, beginning of August. Also, one thing that I really liked during yesterday's earnings call was the guidance. Yes, we got a raise in guidance, but it wasn't an aggressive raise. I think Alex is currently pricing in revenue growth of 6.5%. If the new innovations start to get launched within the US and we continue to see this momentum grow, then there's no reason as to why PayPal can't grow their revenues 9, maybe even 10% year over year, basically continuing to beat expectations. So what Alex Chriss is doing here is very smart. He's a new CEO at a big company, and he's basically eliminated all expectations, and that obviously sets us up very nicely for the remainder of the year to kind of beat those expectations and hopefully cause a positive reaction in the stock price. So just wanted to come onto YouTube and share with you all my thoughts with regards to PayPal's Q1 2024 earnings report. I was very happy with what I saw. There was a lot of good stuff. Of course, there's always going to be a few metrics which aren't as bullish as you quite hope. So, a good example of this was the buybacks. I was hoping for maybe 2 billion in buybacks. We didn't quite see that. We only saw 1.5 billion. But again, this company is in a transition year. So there are going to be little hiccups and speed bumps along the way. But all in all, I was very happy with the figures that I saw yesterday. Just wanted to come on here and share my thoughts with you. Don't forget, guys, if you would like to work with me on a personal note, then make sure you visit my website, dailymarketmovements.com. The website link is in the description of today's video. And if you'd like to join my stock investing group, then scroll down and click subscribe. But thank you very much, and I'll see you all for the next video.